Hello everyone. Hello everyone. This is Sam Wong again. Today is May 20th. Haven't been talking to you guys for a while. Just want to give you some insight and how to stop that I was talking about doing and what is the next move. April U.S. retail sales growth slowed sharply, but annual consumer spending remains resilient, especially in auto and core segment. The PPI surprised to the downside, signaling short-term deflation, but core good costs are rising due to new tariffs. Motor vehicle and auto part retail sales fell 0.1% month to month in April. Gas sales fell 0.5% month to month in April as weak oil price continue to keep spending on gasoline low. The S&P 500 has surged 120% since April. If you kind of take a look at the pictures of S&P 500, you can see that the big dip here, which is the Liberation Day, and drive the market down. And you actually can see it's actually recovering 20 some percent since then. This is really what many people didn't really realize, and Tom Lee actually the one getting it right is the V-shaped recovery. And you can see the one before that, which is the Dow Jones Industrial Average (QQ), doing the same and just drop it to the time of the Liberation Day, which is April 4th and April 8th this timeline, right? And they actually forming a formation of going back of a V-shaped recovery. Um, and though in my recent video, HYL and I said would be $2, we actually again you're gonna look at your stomach and look at adjusting on your preferences and target where you're at, and sometimes my price is not quite getting to that low or may not be reaching that high, but honestly it's really very close. And I just like to highlight that $1.91 was actually at the peak of the time during the cycle. I talk about this stock. So it's actually pretty close to $2. And however, the announcement earning really fell short. So the stock since then from $1.91 very quickly turned around and now dropped to $1.28 and lower, pretty much hitting the lowest point. But as I told you, if you would have listened to my video from a month ago and you bought it around, at the time dollar-ish, I would say around the average of $1.60, and you sold around $1.88, and you still have a pretty good profit. And in my cases, I actually did average it out using the rate costing methodology. And I sell around a dollar. I did sell some at $1.88, but although I still have a lot of my shares on my hand right now, but I bought back actually around this level now, $1.28. So just think about it. You may go down further, but again, this stock have been giving you history. You can look at that yourself. You will see that a lot of time during the earnings, which now we have to wait for next quarter, you will come back up again, and then so you may be holding time about 2 months, but the return, as you can see, that way in April, you got down to $1.17 at the lowest point really, and you really jump back up in a month, and just really think about it, almost 50% return. The other stock I also want you to pay attention to is ACLS. The stock pretty much actually tipped down around April-ish time frame, liberation time at $42-ish. And actually, you have rebounded pretty well since then, gone up as high as $67. So again, this is almost 50% return in a month. All I'm trying to say is this, right? The stock I pick is different than the institutional investor. You definitely beat the market return, and like I covered earlier, that S&P 500 about 22% return, Dow about 20% return, and S&P and Nasdaq actually about close to 25% lush return. So my stock will actually hit pretty well and actually come back and giving you return higher than the market. Of course, the higher risk, the higher the return. So when you hit for those of you who have listened to my video knowing that, 20% really the target rate of return. So around that 20 to 25, normally for short term, you will consider selling, and then when you keep tearing back, you'll buy back. So for good example, so HYLN, you tip $1.88 at $1.90 points, and then now it dropped back to $1.30. So that is really 50% cut off in very short time, and it's really good to buy back. So the other one is I demonstrating that have been instructed on robots, and again $75 was my point of selling, right? And I sold some and sold some again at 80, and I still have just a handful of shares of robots now. But and you can see the liberation date around really at this low tip point was about $53. So if you were about around 53, let's say 53, $56 range around that, more realistic, right? Because the market started to rebound, you're more confident you buy back. And right now it's at $80. So $25 return in such a short time, now a month. I mean, what else can you be, right? And I still think this stock for long run, still thinking somebody can buy them back. And right now, currently, they're still at a loss, but you know they're cutting down the loss and they continue to have a higher subscribers. Um, so the other stock I want to cover is while the stock have been really doing pretty down time during the risk of tariffs, right? I really a lot of analysts understanding and believe that even the Trump have really depressing and adding this 145% tariffs to China is really not sustainable. The news already started to fear about supply in U.S. and say after 2 months, if the tariffs doesn't come back, then we really will be in shortage of a lot of goods, just like maybe even worse than COVID. So the soon the news come out and Amazon trying to review the tariffs, that's the price about the tariffs that need to pay additional to the cost of consumers, you really kind of a wicked call for him to kind of turn around and really start to have these tariffs talk. And as you know, the result, he actually did pretty well with China and really cut back a lot of tariffs in 90 days trial. So I bought during the time, I bought some stock, Chinese stock, Tencent, Alibaba, Pinduoduo, and BYD, which is my favorite EV stock. And if you look at those that, it tells you, for example, I'm just showing you here, it's Tencent. You probably would buy it, actually the stock wasn't really that bad, about 40, 50 some dollars at $66. So this one wasn't gone up that much. But if you look at Alibaba, the price was about $100 at the time. And now it's actually before they announced earning was $135. And the earning was kind of a little disappointing, so you dropped 10%. So you're still standing solid at this point, about $120. So that 20% return in 2 weeks, not even 3 weeks. And then XPEV is still up and down between $19 to $21. So it's a little bit harder to make money off of it. But I'm still optimistic about EV stock, and I think a lot of Chinese EV really sold in Europe and continue to expand with different model and sell to other countries. So it's showing that the concept, not only the concept work now, but you really in reality, once the economy of scale has reached, Xpeng, NIO will really have a big future along with BYD. So also the news is CATL, which is one of the very large battery company, issue an IPO in Hong Kong Stock Exchange. So that's just why you can see a lot of Chinese stock really very bullish at this point. And I really look for success of this IPO and pushing the price to go further up, around the industry. Also, all these are big high-tech stock. He also indicated that the foreign investor have direct money back to Asian stock market, which were really seriously bad previously in last year or so, over the last few years. And the market closed very strong again in these Chinese stock. So while we're cheering the success of tariff talks, the earnings session is almost over. So they also press on debit in U.S. Treasury and renewable time of those bonds in the market. So that's what's driving why the market up and down. And also latest news from Walmart that the company warned about the price adjustment and will not be providing guidance. And because the consumer prices, why they're trying to control, is actually because the tariffs have been pushed up, right? In some extent, that there will be also sign of potential issue going forward with the stock market. But there's some catalysts about stock, still rate potential rate cut, corporate tax cut, restructuring and deregulation. However, before you get to that point, I think the market actually probably will tip back down. That's why I'm now recommending that if you make 30% of profit of these stock are recommended, right? You really should be consider profit taking at this point, and you know how much market can go. Think about the index, maybe another 5 or 10% right before tipping down. So my lesson learned is that the market been doing very strong in February up to end of February before Trump trying to do tariffs, right? Then you got to remember that month that was so painful, recessions, all the bad languages and things. Suddenly, from a market bullish and looking at the S&P 7,000 to hitting all the way down, we feel recession layoff. So how is it possible in such a big economy if you believe the truth, right? What is the version of truth really? Is a market in recession now or continue to grow? So this is why I recommended, you should take a profit and then wait, and then until next round, you know there will be catalysts and stuff that indicating then you will continue to buy. So there always also remember the phase sell in May and go away. But last couple of years, however, using S&P 500 index as an example, beginning of May to end of May, actually the index didn't change much, and then June actually continued to be going up. But again, the key thing is if you see the stock you're making a lot of profit, you really should be selling ratably in different, when the price going up, you make some profit. And therefore, you keep cash as a king. And when the market slip, you buy it back. Someday I will show you to do an analysis of long-term investing versus short-term investing. Okay. Hope you have a good time, and hope you are going to be happy about the profit you've been making so far this year. And any questions, feel free to send me a message. Thank you. Have a great and wonderful week.